From fixing to building. Your new credit journey. Many people talk about fixing their credit. Fixing credit means you are correcting mistakes on your credit report. This is a very important step if there are errors. But today, we are talking about something different. We are talking about rebuilding your credit. Rebuilding credit means you are creating a new, positive history of paying your bills on time. This process shows lenders that you are now a person they can trust with money. It is an active process where you take control and add good information to your credit history, 1 month at a time. It is about building a strong foundation for your financial future. This guide will show you how to rebuild your credit safely and as fast as possible. We will not talk about magic tricks. Instead, we will focus on real, proven tools you can start using today. Tool number 1. The secured credit card. Your first step to trust. The first and most powerful tool for rebuilding your credit is the secured credit card. It is a special type of card that is very easy to get, even with low or no credit. It is easy because you give a small security deposit. This deposit is your money. You usually get it back when you close the account or upgrade later. The deposit makes the bank feel safe and willing to give you a chance. Getting a secured card is straightforward. First, find a bank or credit union. Many major banks offer them. Then fill out a simple application. The most important part is the deposit. For example, $200. In return, you get a card with a $200 limit. Your max spend. Your deposit sets your limit, a controlled way to learn and avoid big debt. Use it correctly every month. Your goal. Do not carry a big balance. Create a record of on-time payments. One small planned purchase per month. Gas or a streaming subscription. Pay in full and on time. Do not just pay the minimum. Banks report to Experian, Equifax, and TransUnion. Each on-time payment adds a positive mark. Tool number 2. The Credit Builder Loan. A savings plan that boosts your score. It works almost backward from a normal loan. With a normal loan, you get money first and pay it back over time. With a Credit Builder loan, you do not get money up front. You make small monthly payments held in a locked account. It is like forced savings, and it helps your credit score over time. Go to a bank or credit union and apply for a small amount. $500 or $1,000. Say $600 over 12 months, about $50 per month. Each on-time payment is reported to the credit bureaus as an installment loan. It improves your credit mix and shows consistency. At the end, you get the full $600 back. You built a year of positive history and saved money. A win-win. These loans are easy to qualify for and common at credit unions, community banks, and some online lenders. Combine a credit builder loan with a secured card for a powerful 1-2 punch. Yeah, that combination really works. Tool number 3. Becoming an authorized user. Borrowing a friend's good credit. It can give your score a quick boost, but requires real trust. When added, the card's history can appear on your report. If the card is old, always paid on time, and kept at a low balance, that helps a lot. There are 2 important rules. Rule 1. Choose someone with excellent habits and many years on the card. If they have bad habits, it can hurt you. Ask someone you trust completely, a parent or a spouse with pristine history. Rule 2. Confirm the issuer reports authorized users to all 3 bureaus. You don't need the physical card. Reduce risk by not using it. It can increase average age and lower utilization. Both key factors. It's a simple way to borrow good history while you build your own. The final tool is not a product, but a habit. Managing your credit utilization rate is crucial. It is how much you use versus how much is available. High utilization lowers your score, even if you pay on time. Aim under 30%. For best scores, around 10%. Example, a $500 limit. Keep balances near or below $150. Better yet, $50. Issuers report on the statement closing date. A high balance that day can hurt. Make a payment before the closing date to report low. With low limits, small balances become big percentages fast. Keep reported balances low across all cards. This signals control, not desperation. You are actively managing a major factor and accelerating your rebuild. Keep it ideally under 10%. Now that you understand the 4 powerful tools, here's a simple ordered plan you can start today. Follow these steps to create a diverse, positive stream of information. First, apply for a secured credit card. Choose one with a low annual fee. Make the smallest deposit you're comfortable with, for example, $200. Set a small recurring bill on it and enable auto pay to pay in full. Second, open a $500, $600 credit builder loan over 12 months and set auto debit. Third, talk to a trusted family member or friend about authorized user status. Confirm their issuer reports AUs and that their account is old, perfect, and low utilization. Finally, manage utilization. For a $200 limit, report $20 or less at statement close. Watch your closing date and pay beforehand if needed. Combine all 4 for a comprehensive, effective, and rapid rebuild. A little effort now will pay off as your score begins to climb over the next several months. Let's look at a real-life example. Sarah was a young woman who ran into trouble after unemployment. She missed payments on a car loan and a credit card. Her score dropped to 520. Denied for every loan, she felt stuck. She stopped applying and started rebuilding. Week 1. Opened a secured card with a $300 deposit. She used it for an $11 subscription and set auto pay in full. She opened a $500 12-month credit builder loan with $42 auto-debited monthly. Her mother added her as an authorized user on a 15-year-old low-balance card. Within 3 months, the AU history appeared, and her new accounts reported on-time payments. After 6 months, her score jumped over 80 points into the low 600s. After a year, near 680, approved for a reasonable car loan. All from slow, steady, correct actions. Her story shows what happens when you follow the plan. As you rebuild, avoid 2 common mistakes. First, missing a payment on a new account can undo months of progress. Late payments remain for 7 years. Hardest hit when recent. Set auto pay on secured card and builder loan. Protect perfect payment history. Keep funds available so auto pay never fails. Second, opening too many accounts at once triggers hard inquiries and can look desperate. Start with 1 secured card and 1 credit builder loan. Then pause new applications for 6 to 12 months. Authorized user status doesn't require an application. Be patient. Show stability, not a stack of cards. Stick to the plan. Rebuilding your credit score is a journey of patience and consistent, positive actions. It does not happen overnight, but these tools speed progress. Each on-time payment is a brick. Low utilization is the mortar. Celebrate small milestones along the way. You are building the essential foundation, and you're halfway there. Once your score trends up steadily, the next phase begins. It is time to move from basic building to strategic improvement. Now let's optimize your score strategically.